Christian, I wanted to start with you and just kind of go for the simple question of, investors will be wondering what looks kind of attractive in this inflationary environment if it persists, and what are the kind of weak links in say an equity portfolio? Where are you finding resilience and where are you a bit more concerned?
A very good question, of course, very topical. I mean, inflation in the last 1.5 years has surprised many, not least the central banks, all the time. When we came out of COVID, it was seen as an issue that was driven by the supply chains clogging up and China being locked down. Yet it became more persistent as we went into 2022, and of course the war between Russia and Ukraine clearly made things worse for everybody, at least in the Western world, particularly via the energy prices. Now, it had a profound effect this year on the equity markets. You saw that equity markets dipping. It's simply a technical effect in the first place. Kind of every asset is the current price, the sum of the discounted cash flows that are coming along in the future, and if that discount rate goes up, the prices will fall, and that is what we have seen earlier this year. What's making things worse was simply that on top of the increasing inflation expectations, we saw a rise in the risk premium. Given the war in Ukraine, we have seen similar effect, and that was dominating the first half of this year. Now, what does it mean for portfolios? Clearly, every portfolio suffered from this downdrift in prices generally as the discount rate rose. What we have to do now basically is look into the portfolios, and we're always doing that, and see the weak links that are potentially out there. I think we're pretty well placed, simply given our quality focus we have in the Brunner Trust. So we invest in companies that do have a strong moat, operate in a pretty calm environment when it comes to competitive pressures, and are typically able to raise prices. So that will be important for companies, and it's important now and will become more important as the year progresses, that you as a company are able to increase prices to avoid margin pressure. So that's a laser focus for us, and I think we're well placed in that regard. And otherwise, clearly there might be even the one or other beneficiary of the current environment, companies that are able to expand their market share if competitors are troubled, and that will be another opportunity.
It's interesting that you mentioned pricing power. That feels like kind of one of the magic traits that many investors are looking for. But say, if kind of viewers are thinking about shares, I mean, are there any kind of key metrics you would look for as kind of a sign or characteristics in a company that would indicate it might have that pricing power?
Yeah, obviously looking at the profit and loss ratio, kind of you see that the gross margin is the number I would look at, because it is what's left over after you have deducted cost of goods sold from the revenues. And initially you will see kind of companies cannot increase prices immediately if kind of the energy prices move up, but they will do so in the contracts as you move along. And companies that have pricing power, you will see stable gross margins, rising gross margins going forward. For companies that do not have pricing power and that suffer from inflation and cannot roll it forward, you will see pressure on gross margins. So this would be the line I would look at in the P&L, basically.